All right, like my cousin used to say. So let's talk about the state of consumer finances. Recently, data from JP Morgan has shown that the amount of cash that people have is far higher than we were led to believe by the big banks just last year. CEOs expected that people would have burned through their excess cash faster than they've been doing. And consumers are actually holding less credit debt and paying their bills at higher rates than they were pre-pandemic. Now, this information suggests that fears of a consumer-led recession in 2023 are likely to be overblown. Now, while it's difficult to predict exactly when a recession may happen, JP Morgan's data suggests that the earliest it might be is like mid-2024. However, the economy is a complex and unpredictable beast like we know, and we can't be certain for sure when it's going to happen in the future. All right, so consumers are continuing to borrow money, with personal loans being like an increasingly more popular way that they borrow. All right, even so, credit card balances as a percentage of disposable income are lower than they were long before the pandemic, and spend data is healthy. Now, despite all this, it's important to note that a recession could still occur if there were to be exogenous shock or a black swan event. So it's also worth considering the state of the economy in light of investment opportunities. So investors should take into account the fact that consumers have more cash on hand than previously believed and adjust their investments accordingly. As always, though, it's important to seek personalized financial advice rather than relying solely on generalized information. All right? So as we move forward, we'll be keeping a close eye on the economy and how it's going to evolve over time. The data we now have suggests that the consumer is in a better financial position than previously thought, but there are many other uncertainties. So take that into account.